Next segment is about fintech. So, fintech has become a very integral part of the financial system with UPI becoming all pervasive. So, do you see fintech in the long run beating big banks at the lending game, or will we reach a situation where fintechs and these traditional players will leverage each other's synergies and sort of come together to do their business?
Right. I think, again, we need to appreciate the history, right? When this whole fintech started coming in about 10, 12 years ago. And, at that time, I think given the size scale, most of these fintechs were, banks didn't really recognize them at that point in time, and, at their time also, most banks, when they look at India or globally, were viewing the digital space as a website. And then maybe after a website, it became, okay, I have to have a good app around it, right? After the app, it became, okay, let's set up some processes, etc. And then processes became more like, okay, how much now today it's how much revenue am I getting from my business on the digital side, right? And that's how it's evolved. Now, from a standpoint of fintechs and how do banks see fintechs, I think from seeing those players, which was sort of small player, they saw them getting size, scale, and they also, I think, banks have appreciated the fact that it's better to get them to be allies, right? Where what I mean is that at times it's too much for us to even experiment and the time cost, etc., to build the technology plus the DNA. Right, some of the DNAs also doesn't exist in some of these banks, right? We're talking about, right? And if because the DNA doesn't exist, then you don't solve the problem. Also, it takes you're solving it in a very old school way, which may not be the right way to do it. Right? Today, a Gen Z thinks very differently, right? Compared to what a millennial would think or a person who's slightly older, in the late 40s would think, right? At the end of the day. So the fact is that banks have realized this. And I think in the last 4 5 years, you've seen that banks have been collaborating actively with fintech players, right? Now the space is very large. Lending space, right? At the end of the day. So the fact is you will see the banks, I think, collaborating, marrying the technology, using that to their advantage, setting up the right JVs where they're able to leverage. So, for example, it could be faster credit checking, right? It could be a faster instant disbursal. It could be even, from a collection standpoint, where banks would utilize technology, maybe AI, to figure out, okay, what's the way to get more ROI from the collections, right? At the end of the day. So I think there is an aspect when you look at even the payments business, right? I think integrating with technology providers, fintechs has proven very beneficial to banks, right? At the end of the day. So the fact is that you're going to see a coexistence that is going to happen in the next couple of years, where you see, fintech players come in. Banks, I think, by virtue of the fact that they're, I think the regulation, right? So, um, the way it is structured in India, RBI, and the ability to take deposits today exists, demand and time, bank accounts exist only with a bank. So I don't think you're seeing banks in any form getting diminished or getting threatened. If you see how big they are in the last couple of years, right? The top banks, the private sector banks in India, they've really gained in size. Right. So it's going to, and banking is the backbone of any economy. Fintechs are going to take time. I think fintechs today grapple with cost of acquisition, right? If you look at it, most of them, it's really difficult to acquire customers at a reasonable cost. And even the ones who have achieved a certain scale have, sort of, they are looking to turn around their businesses after being in the space for a very, very long time, right? And then move towards profitability. So I think that's the fact you see. So I think it's going to be the market of coexistence. You're going to see banks grow rapidly even from here, and you're going to see some good fintech players also, stay in the market and become big and exist alongside banks. That's the scenario I see playing out.
So, talking on the evolution of fintechs, so over time we have witnessed that there's hardly any money in the payments business alone. So, how do you see fintechs adjusting to this reality? Of course, they are making changes and diversifying into other areas. So, how might that play out?
I think one thing to recognize is that payments is democratized in India, right? By virtue of making sure that every user is having payments available and on the mobile phone, and you've been able to do this with zero MDR, right? Which, like Panchan, you said, you can't make money at the end of the day. Now, it remains to be seen that whether there is going to be any MDR introduced in the future, right? But Till the time it is not, right? And Indian consumer is very loyal to price, right? At the end of the day, as soon as you start charging some money, there's going to be some sort of, change that you might see from a consumer's spending patterns, right? Now, the fact of the matter is that payments is a difficult business, right? But there are certain pockets over there that people do make money, whether you look at the payment gateway business or you look at the NETC fast tag business, right now. And the way payments has been seen in India is that you have one entity, which is payments. So typically, when you talk about payments and democracy, you talk about UPI, right, which typically has zero MDR and everybody is using it, pay via mobile, right? So that has been a very good user acquisition exercise, right? And the fact of the matter that remains is that once you've got a user, you've obviously got to set up a entity which is able to cross sell to the user. Now, a lot of fintechs do analysis on these spending patterns, and they're able to offer it more and more, products to these users at the right time. It could be a card, it could be credit, it could be anything, right? At the end of the day, and I think once you've got a payments business, you've got to be able to build this whole ecosystem in the right way for the user, being a company in payments, to be able to sort of run a business profitably in the right way, which is what I think ultimately your shareholders seek, right? So it's a matter of cross sell. It's a matter of building this ecosystem around payments, and that's how I see these businesses, and they will diversify into other areas. They have to. There is no question about it, right? At the end of the day, you have to run your business for your shareholders.
Okay. So, sir, follow-up question to that. As you said that it is a good way of acquiring your customers since your CAC is very low in
Yeah.
acquiring customers that way, and you have to build an ecosystem around it. So, we
Yes.
have seen companies try to do it in India. PhonePe is selling insurance, Paytm does
Yeah.
its broking business and other businesses, but we haven't seen any one of them turn profit. So, is it still in its infancy stage and it will grow, or do they need to look for other avenues apart from these?
Yeah, very good question, right, Jay? I think the fact is that I think it's a bit to do with the DNA of some of these companies, right? I think it's a bit to do that they've got to, move in the evolution cycle of actually looking at these aspects. Now, the way I like to look at it is that uh, profitability is very looked at by public listed companies because the market rewards them as such, right? I'm sure you guys, know the difference between private and public, right? So public companies, we are in the result season, and people look, okay, what are your results? What are your revenues? Have you grown? What's your profitability? Have you increased your profits? Right? When you look at unlisted entities, unless they're late stage, typically you are in a growing cycle, right? When you're growing, you're like teenagers, right? You do a lot of reckless things to grow, right, at the end of the day. But when you sort of at a much later stage, you need to stabilize yourself and get into adulthood and do the right things, and then you're lining yourself to get listed, right? So I think there is a paradigm shift that starts happening at some point of time. That paradigm shift could be one when you're becoming from private to listed. It could be one a function of market environment, right, when you're seeing your funding aspects growing up. If they are completely down and you're not seeing funding happening, which you've seen the funding down cycle, you see a lot of entities focusing towards, okay, let me try and cut costs, let me try and see how I can sort of maintain or grow revenues and move towards profitability, so my burn is not there and I survive this phase, right? So I think it's a lot about shifting gears, right? It does take time to shift and get into profitability. I think it's also a function of what you are rewarded for at the end of the day, right? They are a bunch of very, very smart people running a bunch of very, very good quality companies, is what I'd like to believe. I mean, and if you look at it, most of these industries, like whether you look at lending or broking, there are enough and more examples of profitable entities, right? Enough and more examples. It's not as if it's not, right? The fact of the matter is, I think it's a question of the direction, the people, and the kind of objectives that they're going to be rewarded for over time. So if you look at listed entities today, Zomato, in fact, has turned profit, sort of course, and we never thought that over so many years, okay, they've been burning money, right, at the end of the day. But you see that happening. So be the case in fintech, right? Whether you look at Paytm or some of the other players, right? They would need to, and Zerodha today has been profitable since inception, right? So the fact of the matter is, it's also about what you're going to be rewarded for and the objectives of the company internally. That's how I'd like to believe that this is going to play out.
So just another follow-up question, as
Yeah,
you said, that it is a function of the environment that the
yeah,
company is in. Right now, there is a push for going profitable, but as you said earlier, that currently VCs and PEs are sitting on a lot of dry powder.
yeah.
So, do you see that being started to deploy in the coming time, and when? And will we be seeing change in how the companies function when they start to get those big funding rounds again?
Right. Very, very
Will
good
like
question.
the goal change?
Yeah, I think the fact is that I think it's a question of what you're going to be rewarded for, right? At the end of the day, right? Now, if you're going to be rewarded for higher growth, and that growth has to be defined in terms of what are the costs for that growth, right? Earlier, it used to be growth at all costs, and I think people realize that that's not the right way, right? So while you may need to pump in money to grow, and there will be extended burn that you have in terms of your negative P&L, right? I think that's something you need to discuss with your investors, be clear on the objectives, what the money is for, right? And you may see some of it coming back, yes, once the money comes in. But I think that people have seen that if you are to move towards public markets, if IPO is the exit route for the investors who got in at the later stages, then you're going to have to make those shifts, right? Because the public market, like I said, rewards you as an entity very differently than how the private market rewards you, right? At the end of the day. So I think you need to respect that. And I think some of it may come back, but I think there will be a different avatar which comes in at the end of the day. So you may not see that complete reckless spending. You may not see that reckless, unviable, some of the startups which come into, space which seem very unviable as a business model. Those will not be funded possibly. But I think after the turn of events, let's say on specifically, let's say interest rates and inflation, and if they sort of come down, the funding winter thaws. We're seeing some signs maybe, and the larger checks, smaller checks, the whole volume sort of increases both in terms of the size as well as the number. Uh, you're seeing, more activity. You may see some of this growth coming back in, because people will want to focus towards growth.
So, sir, can we see like these, let's say, companies like PhonePe, who more or less do the payments business? They have they have not tried to get into banking partnerships or let's say form a payments bank. So, sir, do you see that some of the companies might becomes only the vehicles for customer acquisition? So, let's say a Flipkart might continue to stay in this business just for customer acquisition.
See, ultimately, you need to be in the business for customer acquisition, but you need to monetize the customer, right? As standalone business, right? You're not just a business just for getting customers, like what used to be maybe a bank bazaar many years ago, right? They used to be a funnel to banks and other entities in terms of getting leads and providing customers, right? At the end of the day, and charging them money for it, right? But I think those models typically are not the models that today most people work with, right? You want to get customers, and you want to be, whether it's through a JV or whether it's your own entity, you are wanting to be a profitable entity at the end of the day, right? Today, even private markets, whether you look at private companies, they want to be, with a better P&L, better business metrics, reduce their cash burn purely because of a function of where the funding market is at, right? Public listed companies are where they are. So I think that's what you're going to see, right? At the end of the day, you are going to see getting into allied areas, like for example, in banks, one of the most important in a retail environment that you look at is PPC, which is products per customer. You typically want to inch towards a 3.5, 4 number, because that's when you see a J curve typically on profitability. When you see more and more the customer having more and more products with you, uh, the customer typically at one point of time considers you as the main and maybe wholesale banker, and others being very ancillary or peripheral, which means that the entire wallet of the customer, whether being any product, is with you. And because of that, your profitability or revenue from the customer is sort of just, it's like a J curve at the end of the day. So that is a very important aspect. I think a lot of smart fintech players recognize, and I think they're moving towards it, right? Yeah.
Thank you, sir. The Center for Financial Markets and Finance would like to thank Gaurav, sir, for taking out the time for the interview and enriching us with such an informative and insightful discussion. It has been a pleasure, sir. Thank you.
Thanks. It was great to be part of this. Thanks to Jay and Manshin. Thanks.
Yes, sir. So, sir, sir, we'll get a cut here, sir. So, sir, me and Jay wanted to ask that, sir, how was your life at Standard Chartered? So, particularly, Jay wanted to know that how was your life at Standard Chartered? Now, how was it, that career?
Good. Very good. Yeah, very good. I had a very good time at Standard Chartered Bank. I was there for 10 years. I think the key for me, I can't talk about others, but for me specifically, I think I used to be in one role for 18 to 24 months. I think my longest time I was in one role for was about 2.5 years when I was head of investments, right? Typically, my roles were that long. And I think by virtue of the fact that you kept on moving from one function to the other, and I was very fortunate for that. And I got into some very good roles, leadership roles, right? At a very early age, like my head of investments, I was very young. When I was head of the business banking division, I was very young. So I think those sort of experiences were very enriching. So I had a good time at that, at Standard Chartered. What I'd like to say,
So,
very
sir,
learning.
the reason I wanted to
Yeah,
ask you is this: my internship is also in a wealth kind of setup. So, I'm interning with Tata Capital in their wealth division.
got it.
So, I wanted to get some insights from you, like what goes on in the wealth, what are the different kind of roles, what
Sure.
can be the careers that can be made in.
Right. In fact, did you take the wealth course? Have you taken or
So, sir, we
what?
have it in term 4. Yes, sir. So, sir, we'll have it
Okay,
in
so we
term
have
4
opted
after
for
our
it.
internship. Yes, sir. I've also,
Acha,
so,
acha.
yes, sir.
That
We
will
both
be,
have
I think,
opted
this
for it.
July, August, September. Okay. So
Yes, sir.
I take that course. I don't know if you know a couple of lectures in that course also. By the way, that's taken by Professor Harsimran Sandhu, right?
Yes, sir.
Yeah.
Yes, sir.
Okay. Great. Okay, so I'll see. But what happens is I cover a bit of this actually, Jay. But given that you're going in for the internship, see, the idea is that wealth has typically two broad units. One is the whole unit on advisory, which is typically in common sales, said business development or sales or what you want to call it, right? Which is the advisory business where you go and meet clients and look at their existing portfolios, look at the direction, advise them, talk to them, talk on markets, talk on existing products doing well, not doing well, the shifts required because of whatever is the market scenario. And there could be new products that you talk, right? So that's the whole advisory business, right? The other is the central team, the product side, right? Which is the central team, right? Now, product team, okay, what are the functions? One is, the whole setting up the whole advisory piece, the process was right. Give us how do you sort of advise a client? What should you check? How do you do risk profiling? What are the steps to advising a customer? What are the products that can be advised a particular customer given the risk that they are at, right? Because if a customer is 60 or 65, senior citizen, you may not advise a high risk, product to that customer, which is let's say on derivative trading, right? I mean, it's a mismatch, right? So the fact is, you set up those controls on the whole process. You set up the product team also decides which product come on my platform, right? Whether it's which other MF products come in. You have 40 plus providers. Each provider has 30, 40 products. You're talking about 2,000, 5,000 funds you're talking about. So which one should be on my platform for which category? Right. Similarly, for the other products in PMS, whether it's you know, alternative investments like we spoke about, structures, gold, commodities, quant, PMS, all these, which are the ones that come on my platform. So the whole evaluation and monitoring aspect come in, right, at the end of the day. From a product, then the whole rating mechanism, which is month on month, for example, which are my best rated products, what to do in portfolios at a customer level, what are the actions, and what is my sort of monthly direction to my advisory team, right? So that's what the product team does, some of it, the setting up the processes to ensure that there's no mis-selling, right? Or we are sort of advising the customer. So a lot of process design, product design, the whole economic outlook commentary, right? Looking at economic indicators, you typically have people who are on that side and they're able to churn out reports and actionable items from the data coming in more from a macro. Okay, what are you expecting on interest rates? So, for example, if you're expecting interest rates are going to fall, then should we be loading duration on customers' portfolios? You know,
Yeah.
if we load duration, then we are going to make returns on capital gains, right? And maybe you may end up with double-digit returns on just a fixed income product, right? Some smart decisions are made then, right? So you because yields are at 7-8%, 4-5% हमारा cap gain बना, I have made a annualized return of 14-15% on a fixed income product, correct? So those are the views and calls, and so the marriage of an economic view with a call, with productizing it and then disseminating it, is something a product team would do. It obviously, some of it is very exciting also at the end of the day. A lot of it is operational in terms of, like I said, process, controls, and all these things. So it's a mix of a lot of things that happen, setting up incentive structures, etc., managing the P&L, managing the risk also. For example, if you're in a situation where you may expect defaults to go up, then how do you sort of manage? Was I should not be in a product, in a fixed income product, which is, let's say, a credit product, and you could expect a default in one of the bonds, right? So what do you do, right?
So,
That's a
sir,